everybody, welcome back to the Bitcoin Business Bureau. I'm your host as always, LitecoinLeader. Today we're going to talk a little bit, something a little different today. Not crypto, not gold, not silver. We're talking about real estate and how it's going to impact you and your financial freedom. So I picked up on a few things that I was looking around, saw a nice video today, wanted to build upon it. So let's build on that story, talk about it, and then we'll come back with a little conclusion next. So today on the channel, we're not going to talk about crypto so much. We're going to talk about the economy because it's all interrelated and it all is impactful. So as you may know, as you probably know, you should know, I watch a lot of different YouTubers out there and a lot of different things. I watch gold, silver, economics in general, crypto, real estate, and one of my favorite channels is the Economic Ninja. And Travis did a great job of covering something today that reminded me of a few things. And this one was a particular story, and I'll link it. I found the link over here. I'll put that out there for everybody. But this is the Montgomery Mall is selling for $55 million in a foreclosure sale, and it's a commercial real estate article. It's rather recent. I can't get that banner off of there. Sorry. There we go. But it was just released over the weekend. It used to be worth $195 million back in 2014. Now it just sold for $55 million, and it was appraised for nearly $60 a couple months ago. So commercial real estate is going into a downturn and a downward spiral. So that impacts a lot of the real estate, the commercial markets, and also your pension plans and 401ks. We'll talk about tying it all together in a moment. But this got me thinking because the Montgomery Mall, I know of it, and I used to live in the greater Philadelphia area. I grew up in South Jersey. And I know this mall, and I know a lot of other malls in the area and other companies that are involved. I used to be involved in an investment club, and one of the companies that we looked at REITs in particular because they were high dividend. They gave away double-digit dividends every year, and one of our favorites was the Mills Company. And the Mills Company, they own Franklin Mills in Philadelphia. They run the mills in Maryland, Potomac Mills in Virginia, St. Louis Mills, all over the country. Had like 20 different malls, big projects too. So I wanted to look and see how they were doing, just to get we get an idea. Montgomery Mall not doing so great. We get it, losing some anchor stores, just like they all are. What are the other mall companies doing like? So I looked at the Mills Company. I had no idea that it went bankrupt in 2007 and was bought out by the Simon Property Group. That led me to looking up the Simon Property Group. The Simon Property Group, its headquarters in Indiana. It is one of the largest REITs, real estate investment trusts, that's out there, that owns shopping malls and outlet centers. So this is a good barometer of commercial real estate right now in the country. And they have 203 properties. That's a lot. So let's take a look at that. And hey, look at that, Edward DeBartolo. I remember he owned the San Francisco 49ers, if I'm not mistaken, back in the day. But I looked into this, and let's see how Simon Property Group is doing. Well, it didn't take me long to find another article from the Motley Fool, which is a highly regarded financial website that's been out there for 20 years or so. And there's the headline: "These two REITs would benefit if governments put more money into the economy." That's not a positive sign for these REITs. So we have Simon, and we also have another one called Omega. I don't know much about that one, but Simon says, Simon would benefit from individual assistance as it would help juice retail sales at its malls. That is a positive spin for a negative story. Juicing sales at its malls means they're not doing well, as I think everybody can attest that retail has not been doing well the last couple of years. Lockdown will do that. Supply chain issues will do that. People aren't really going out and spending right now. The economy's in a downturn. There's inflation. So why would you be spending? I know it's Christmas season, it's holiday season, it's the top shopping time of the year, but it doesn't look good for commercial real estate. So we have the Evergrande situation and Fantasia going on over in Asia. That's not looking good for commercial paper. And all this ties back to pensions and 401ks because a large portion, or significant portion, I won't say large, but a significant portion of investments for pensions and retirement plans, 401ks, involve commercial real estate and the paper they're in and these investments. So if they're not looking good, it'd be a concern. So I went and looked at the Simon Property Group. I opened up their stock ticker. It looks great, but all of the stock market's been looking great as of late. And it's at a high right now. So maybe it's it could be facing a downturn. May not be a bad idea if you happen to be involved in a REIT like this. Profit taking would not be such a bad idea. So where do you put that? Of course, I would recommend not financial advice, but diversification is always a possibility. Maybe cryptocurrency is a hedge against inflation. Not financial advice, but I'll leave that up to you. But I wanted to point out today that Ninja point out a great article about the economy. We need to look at the entire economy, and yes, I am a crypto guy and a cryptocurrency person, and I do dabble in a few other things. I used to do real estate for a number of years, so I have a good finger on the pulse of that still. And you need to keep an eye on everything. Everything is interrelated right now. It's all woven together in the financial market. So if we're seeing malls going for foreclosure sales, and we see property groups that would benefit from a cash infusion, these aren't positive signs for the economy. So take that as a cautionary tale. Think about how it could impact you, and consider taking profits if you can, if you're involved in something like this. Not financial advice, of course, but just because you're involved in one sector of the economy, it doesn't mean you need to have blinders on to the rest of it. So keep all that in mind. Take a look at all the different sectors and keep listening to channels like this. So hopefully you keep abreast of the different situations going on out there and how it could impact you and your financial success towards financial freedom. So there you have it. Commercial real estate not looking good. We've got malls closing. We've got owners of malls hurting. We have financial institutions saying that we're going to need support. We have articles coming out that's saying these companies would be better off if you got more money. Of course, who wouldn't be better off if they had more injection of capital or more funds? So you got to keep your head in a swivel. Got to keep an open mind. Got to watch all these different things going on in the real estate market and in the capital market and all the financial markets, because your financial freedom is at risk. So if you don't have time to do that, I understand that. That's why you have channels like mine, and you have my Patreon as well to get more information. We're going to be picking up on our AMAs next week. But for now, I'm going to close the drawer in the bureau, and I'll see you next time.